Welcome back to Morning Trade Live. I'm Renita Young, and it's time now for the Chartmaster. So we've got Alex Coffey on fundamentals. We've got the Chartmaster, Rick Ducat, bringing in the charts. Alex, let's start first with Shopify. It's up almost 8% on the day. What are we looking at with the fundamentals?
Yeah, largely this could be due to some analyst commentary that we got this morning following meetings with some of the company's executives. Canaccord analyst David Hines in particular talks about after meeting with some of the company's members, CFO Jeff Hofmeister, as well as head of IR Carrie Gillard, and he left that meeting feeling, this is his words, the instinct is that Shopify should be a buy, not a hold. That led to an upgrade buy from hold and a price target raise to 70 from 60. They talk about this being a secular growth story in terms of e-commerce. They also talk about it being the de facto standard for small and medium-sized businesses, and increasingly for mid-market and low enterprise merchants. They said it should be a good market for years to come. And to watch point of sale as well as business-to-business purchases, as that might be material drivers for gross merchandise volume going forward. They left feeling that the setup in Shopify, as Rick will go through, feeling pretty good about that, as well as the valuation being warranted. So a lot of optimism out of Canaccord regarding Shopify.
It sounds good. Let's talk about that setup to Shopify and what's happening with this chart. I mean, is it sustaining this rally or what's happening, Rick?
Well, it's interesting because we had this long-term uptrend beginning with those yearly lows all the way down there near that little white bubble on the screen, trending upward with this blue line here. We broke below it though about maybe a month and a half ago or so, and it was looking a little dicey here because we broke below this line near 54, this green dashed line. That's about where we topped out previously and then bottomed out after we had our earnings gap up back in May. And we also broke below our purple 252-day EMA. So it was looking like things were kind of falling apart, really. But then we resurged back upward. We took out all three of our moving averages once again. And we stopped at an interesting point yesterday. Right about here, you can see we had our two trend lines, competing trend lines, our long-term upward trend that was old support, then became new resistance. Then we had a downward trending line going off the yearly highs. They matched up right around the same place near 60 or so. We crossed above both of them. So that's the kind of thing you want to be on the lookout for. It can lead to an energetic breakout when you have more than one indicator lining up near the same level. Now, where do we think this move might find some resistance here? Well, there's a couple places to keep an eye on. First, we have our old highs right here, this red dashed line near 67.50. That was about our previous best close that we had during the upward leg of an overall downward move. Then we've got our best closing high right here near about 70.37. To the downside, look out for our confluence of trend lines once again. Then we've got our moving averages in pretty quick succession, starting around our 63-day EMA near like 59 or so.
Okay, well, we'll be looking for a move to the up or downside, and the stock is up more than 87% year to date. I don't know who thought this might have been such a huge breakout after Christmas happened, after holiday earnings, but let's keep it going with Arista Networks. Alex, what's happening with this stock today? Got an upgrade?
It did. From Citi analyst Atif Malik upgrading to buy from neutral. Price target is hiked as well from 177 to 220. So pretty impressive move in terms of the price target adjustment as well. The analyst expects the 400G cloud spend to recover into next year as the hyperscalers spending on traditional data center as well as infrastructure rebounds as and particularly top customers' capex to come back as well. They don't specify who that is, but you could look and kind of suggest based off of that who you think they might be talking about. They also talk about networking and that business, and they talk about how the first round, round one, as they say, went to InfiniBand. Arista, as well as some of its networking peers, believe that Ethernet, that market is a share gain opportunity for 2024 as well as 2025 as AI clusters grow and a more broadly implemented network into existing networks is another opportunity. Citi increased their estimates for earnings for 24 and 25 to reflect modestly stronger mid-teen sales growth and margin expansion for the company. They also say to keep your eye on the November Investor Day as a positive catalyst for the stock. So optimism again, upgrade to buy from neutral, 220 price target.
And this stock is one of the ones that are in the middle of hardware software when it comes to networking, and it's a necessary part of the puzzle. But let's look at what the chart talks about today. Stock is up maybe around 58% year to date.
Yeah, almost doubled off the 52-week lows
Yeah.
as well. We're up about 95% from that point. Overall price pattern, rising wedge type shape. Two upward trend lines, one going across the lows, one going across the highs, converging toward each other. And we're breaking out to the upside above that upper level today. So kind of an interesting situation there. We've got a steeper uptrend in play as well, this blue dashed line here to consider. And we can see that we had a kind of a scary day recently, a big red candle there that we've recovered. We haven't quite cracked above that level just yet here. We haven't really made new intraday highs beyond that point.
Okay.
But we are on pace for a new yearly closing high as well here. So that's an encouraging sign for the bulls here. One thing that stood out to me, though, RSI is actually showing a little bit of bearish divergence here.
Okay.
RSI is not making a higher high as price makes a higher closing high. So that's showing that momentum isn't completely lining up with what we're seeing in the price action. Not necessarily head for the hills, a drop is coming, but something to keep an eye on if it continues and doesn't start to match up with the price action that we're seeing here. So support and resistance. Well, when a stock is making new highs, it can be tough to figure out resistance. That's why I like to use standard deviation channels to help try to project an area you might want to watch here. That comes in right around 199.50, one standard deviation beyond our blue linear regression line, our line of best fit based on closing prices here. So that's resistance. Support would be around our old highs near 190, our old closing high right there. That could be a place to watch. If it does fail, right about here would be the start of our gap up. That would be a point to watch near like 186 or so.
Okay, thanks for walking us through this. We just have one more to go. We're looking at Palantir. So tell us what's going on with the fundamentals today.
Yeah, this is a bit more of a sobering assessment from Morgan Stanley analyst Keith Wise, throwing a little bit of cold water on some of the recent optimism that we had seen in Palantir. The downgrade in the stock to underweight from equal weight Renita and a price target raise, actually reflecting some of that recent strength that we had seen over, let's call it, the last couple months.
So they're playing catch up, huh?
They're playing catch up, but still not necessarily overly optimistic. We'll get into some of those reasons why, but the price target is hiked from 8 to 9, modestly higher. What they basically talk about is, hey, this AI hype, all this reason you've seen this run up in Palantir, well, that's created a stock valuation. It's a little bit at a premium, and that makes it a little bit less attractive from a risk-reward standpoint. They also talk about the visibility on their actual monetization of their AI platform being low at this point. They also, of course, as we know with Palantir, very, very reliant on government relationship and some of those billings that they have from the U.S. government. They say it looks at this point to be unlikely that it's going to offset some of that lack of visibility or optimistic growth. And all the while, this growth's already reflected in the estimates. So basically just saying, this thing's run a little bit, give it some breathing room at this point. There's not a lot of room for outperformance, just a little bit more room for disappointing results here. And that's, I think, the reason behind the rating downgrade.
Oof, okay, so we'll see how it performs. Rick, what's going on with this chart?
This one was a little tougher to analyze, I think. We've definitely seen some energy off the yearly lows. We're up about 155% from that point here. Had a nice run upward from our earnings we had in May. Big move upward, but we've lost about 25% from those highs, near 20 now. So we've also we saw a couple nice days recently, but we're slipping below our moving averages here. Yellow 21-day, orange 63-day prices below both of those. The moving averages themselves, the two I just mentioned, starting to trend downward here, starting to tick downward very slightly. So that's an early warning sign of trend change here. And not seeing a real strong trend anyway before that either. It was kind of more sideways over the last few months here. We're also slipping below our blue line here, our linear regression line of best fit based on closing prices once again. So that's an idea of some kind of fair value. So we're pretty close to the fair value based on our own price history. It would be a discouraging sign for the bulls if we were to close below that, especially because we're also dipping below the 50 midline on the RSI. It suggests momentum is shifting from bullish to bearish here. And, that would be something to keep an eye on as we head into the close if we don't recover here. Support and resistance, we've got this trend line, downward sloping trend line based on our yearly highs and yesterday's highs to consider now that we've dropped off a little bit today. Support, well, the 1365 level. We had a gap here, and then lows here, and then lows here once again. So that could be another area to watch. Once again, not a lot of great support and resistance here based on the price action. Another resistance area would be our old highs right around 16.
Definitely a more complicated analyzation here. Rick Ducat, thank you so much for walking us through the charts. Thank you, Alex Coffey, for giving us the fundamentals.